Hey there, fellow investors and business enthusiasts. Today, we are diving into the world of Berkshire Hathaway and the strategic moves made by its CEO, Greg Abel. Now, you might be wondering, what's so exciting about a company's earnings report? Well, let me tell you, this one is packed with insights and a shift in strategy that could shape the future of the conglomerate. So, buckle up as we explore the numbers, the market's reaction, and the bigger picture that's unfolding at Berkshire. First things first, let's talk about the numbers. Berkshire's operating earnings climbed a solid 16% in the second quarter, which is impressive, but it's the underlying story that's truly fascinating. Manufacturing, service, and retailing earnings jumped a whopping 24%, while Berkshire Hathaway Energy's profits surged 27%. Now, that's what you call a diverse and resilient business portfolio. But here's the twist: insurance, a traditional strong suit, saw a 13% decline in underwriting earnings. So, what does this tell us? Well, in my opinion, it highlights the importance of diversification and the need to adapt to changing market conditions. You see, the insurance industry is facing challenges, and Berkshire is wisely spreading its wings to explore other avenues. Now, the real game changer is the cash hoard. Warren Buffett, the legendary investor, handed over the reins to Greg Abel, and the CEO is putting that massive cash pile to work. During the quarter, Berkshire repurchased approximately $4.5 billion of its own shares, a significant acceleration from the previous quarter. But here's the interesting part: the cash hoard declined to $365.5 billion at the end of June. So, what does this mean? In my perspective, it suggests that Abel is strategically deploying the cash to buy back shares and make strategic investments. It's like a master chess player making calculated moves to gain an edge. Now, let's talk about the market's reaction. Shares of Berkshire are up just 3% on the year, underperforming the S&P 500's 13% gain. But here's the catch: the stock has been on a roll lately, rising 9% in the last 3 months. So, what's going on? Well, in my opinion, it's a classic case of the market's fickleness. Investors are torn between the allure of the cash hoard and the potential risks associated with the stock's performance. It's like a delicate dance, and Abel is navigating it with precision. Now, let's zoom out and look at the bigger picture. Berkshire's shift from selling to buying stocks is a significant development. The conglomerate had been a net seller for 14 consecutive quarters, but in the second quarter, it became a net buyer with nearly $20 billion in net purchases. So, what does this imply? Well, in my view, it suggests a shift in market sentiment and a potential turning point for the stock. It's like a pendulum swinging back, and investors are taking notice. Now, let's talk about the investments. Berkshire's $10 billion investment in Alphabet, the parent company of Google, is a strategic move. Buffett initiated the investment after consulting with Abel, and it's a clear indication of the conglomerate's interest in AI development. So, what does this mean for the future? Well, in my opinion, it suggests a shift towards innovative and forward-thinking investments. It's like a beacon of light guiding Berkshire towards the future. In conclusion, Berkshire Hathaway's earnings report is more than just numbers. It's a story of strategic shifts, market dynamics, and the evolution of a conglomerate. As Greg Abel takes the reins, we are witnessing a new era of innovation and adaptation. So, what's next for Berkshire? Well, in my perspective, it's a journey towards a more resilient and dynamic future. Stay tuned, because the story of Berkshire Hathaway is far from over.